Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending May 6, 2022. So looking at the indexes for the week, the stock indexes, TSX, Russell 2000, S&P 500, NASDAQ, and the Dow Jones were all down after a volatile week. Oil and gold were up once again for the week. The market is still functional and orderly. The market in the US has gone too far in pricing in the interest rate hikes, perhaps, but the sell offs are orderly and they don't seem to be panicking quite yet. Thursday was the worst day for the NASDAQ and the Dow Jones since 2020. The markets are jittery, and as cost of capital increases with rising interest rates, companies are harmed and sell off. Some of the down days look like retail investors are quote unquote checking out of the market and may indicate the coming of a bottom of the market and the famed capitulation phase of the market cycle. In times of inflation and market volatility, use commodities as an inflation hedge and healthcare companies for a volatility hedge. Everybody always needs healthcare. The big news on Wednesday was that Jay Powell and the US Fed raised interest rates a 0.5%, the first such hike in 22 years, and made the market feel comfortable that the next rate hike will not be 0.75%. The US Fed is aiming at inflation and price stability. The following day, however, the thought of a 0.75% rate hike still seemed to rattle the market into a drop, or perhaps the fact that the Fed had boxed themselves out of a 0.75% rate hike, taking it off the table. Your guess is as good as mine. The market ultimately fears that the central banks will cause a recession, which would affect profits. The odds of the central banks lowering inflation and not causing a recession just by manipulating interest rates aren't great. One expert gave the Fed a quote unquote sporting chance of a soft landing. With strong employment and strong consumer demand, Canada and the US seem safe so far from a recession, but 2023 is definitely a possibility. The central banks, in order to lower inflation, must raise interest rates. This will cause spending to be more expensive and lessen demand, bringing down prices. But there is a fear in the market that the central banks will not be able to walk that fine line and bring the economy into a recession by reducing demand too much. Central banks have waited too long to start raising interest rates quickly, and this is increasing the investor fear of the recession. And of course, the increasing of interest rates won't fix the labor costs and the supply issues, which have caused some of the inflation. The US Fed may raise interest rates around 2.25% for the rest of the year. It is quite possible that the Bank of Canada will not be able to match the US Fed raises and cause further weakness in the Canadian dollar. On Wednesday, the US private payrolls in April rose 247,000, missing the 390,000 estimate. In a Friday report, the US economy added 428,000 jobs in April, stronger than expected, and unemployment fell to 3.6%. And keep in mind that 4% is considered full employment. In Canada, we are seeing wage growth, but not as much job growth as in the US. The inflation is being caused by higher labor costs and companies passing on their costs to their customers. This type of inflation is sticky and unlikely to go away. Inflation from the supply chain shortages and the higher price of commodities caused by the war will be transitory. The consumer in the US is strong and spending, helped by the strong jobs market. Canadians are feeling the inflation, however, and their high indebtedness. US consumer is still spending, but this may end as 2022 continues. In Q1 of 2022, productivity has fallen 7.5% as labor costs increase. This is the biggest fall since 1974. The falling productivity can often signal the end of a business cycle. There is the labor cost inflation I had mentioned. Looking at the coming week, the Canadian and US stocks are in full reporting mode. On Tuesday, we have Suncor, Intact Financial, Northland Power. On Wednesday, we have Power Corporation, Manulife, Sun Life, goeasy, Disney, and Granite REIT report. Thursday is Algonquin, CI Financial, Brookfield Asset Management, and Canadian Tire. And on Friday, we have Emera. Looking at economic events next week, on Wednesday is the OPEC meeting about production, and the US CPI month over month and year over year increases will be reported. That concludes my thoughts on the week. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.